Welcome to episode 30 of Building Blocks of Brennan. Today we connect with Tobias, the founder of Trading.tv. Over the past few years, something's become apparent. Individuals want to control their own money. We've seen the rise of the retail investor like no time ever before. Individuals are coming in the masses to invest their own money and not relying on a bank or financial advisor to tell them what to do. They're trying to educate themselves and become financially literate. This is no more apparent than the rise of crypto. The idea of decentralized currency really matching the whole idea of individuals being able to control their own finances and not relying on a government who can inflate the currency at any time. Over this episode, we speak about how Tobias was able to come up with the idea of combining live streaming with a financial platform that is built for financial individuals to share knowledge, and also how he developed a platform that doesn't rely on advertising to make money. They're actually figured a way to monetize social media to some extent. Or this episode, we speak about some of the financial markets, how he was able to choose what products he wanted to trade or have on his platform. We talk about will there be Pokemon cards, sneakers, and some of the other trading assets you've seen in the markets today. We speak a little bit about how he was able also to start a business, some of the struggles of raising funding, developing a business, but also developing a tech team in-house, especially if a founder is not the main tech individual. Hopefully you guys enjoy this episode, learn a bit more about how to control your own money and some of the cool new products out in the trading world, but also check out trading.tv and sign up for the beta.
My name is Tobias Francis. I'm the founder and CEO of Trading TV. We're the world's first tradable live stream and immersive chat platform for traders and financial content creators. You can think of us as a fintech love child of Twitch and Discord meets Robinhood, Coinbase, and StockX. The idea for the project or the platform is simple yet transformative for the industry. We have creators come on. They make content via live stream, video on demand, and immersive chat. We take an asset class agnostic approach to it. So we allow creators to make content covering everything from stocks and options to crypto, DeFi, information markets, and even getting into the alt stuff like NFTs, trading cards, and rare sneakers. And then the huge differentiator for us is fans, followers, and audiences can then trade those underlying assets directly from the live stream. So we're calling this tradable live streaming, and I think it's going to change the way that people invest in the creator economy and digital age.
And that's really interesting, especially with obviously the growth of live streaming, or especially being within our generation, going from nothing to now being a huge platform, individuals making livings, quite hefty livings doing it. And obviously with the, I don't know if it was due to COVID, but the boom in individual investors kind of taking ownership of their own assets and really trying to do it for themselves, not really relying on larger institutions to kind of manage their money. When you were starting this out, were you approaching it more as a financial tool, or were you more on the live streaming side? Like how did the idea come to be? Were you a fan of live streaming but had a financial background, or were you a live streamer who enjoyed finance? Kind of how did that mixture come to be and create what we are today?
No, I mean, I spent 10 years of my career on Wall Street. So I was a trader at Morgan Stanley, at Goldman Sachs, at a hedge fund, and then most recently at an investment bank called Barclays, where I ran technology, media, and telecom trading. And my background as it relates to trading has always been in social media and fintech. So when I started the business, I actually was not looking to start a business at all. I was doing research on what I thought was going to be the big secular trends that would occur in 2020 and beyond. And this is like 2019, pre-COVID. And there were two things that really stood out to me. One was the emergence of the creator economy. And when I say creator economy, I'm really just talking about the thing that you just alluded to, which is people want to pursue their passion and they want to figure out a way to be able to monetize that. Even, and the most interesting element of that, even if that means that they make less initially than they're making at the corporate 9-to-5 job that they just hate. So I knew creator economy was going to be something that secularly was just aligned with like the overall value system of millennials and Gen Z, and something I wanted to figure out a way to be able to make a bet on. And then two was closely related to that, people taking ownership of their own financial life and understanding that the bill of goods that they had been sold since they were children, associated with go to school, get good grades, go to college, get a major, go and work for a big corporate company, climb the ladder, invest in your 401k, buy a house, like that method of making it to where you want to be in life financially and having the freedom to pursue the things that you're passionate about is no longer viable for a myriad of different reasons, but it's just not the case. So what are you going to do about it? Well, the first thing you need to do is you need to educate yourself on how to make money work for you instead of working for money.
Mhm.
And the good news about where we were during COVID is people understood like, hey, my financial circumstances are actually at like an unacceptable point of fragility,
Mhm.
meaning it basically woke the world up that they're living paycheck to paycheck. And they started to focus in on like how to make money with money for the
Mhm.
first time ever. And the most difficult thing for any business is to figure out a way to be able to get people to focus on whatever it is you want them to focus on in real time. And through no action of my own, the world just became obsessed with finance, trading, and investing. And then here came this platform sitting at the intersection of the creator economy and the retail trading revolution. And, you know, Trading TV actually has the opportunity to be a segment defining company, which is just very, very real and very, very rare opportunity.
Mhm. And you said initially, like there was never an intention to start a business, but looking back through your journey, through the, even your corporate life or, through your childhood, did you always have a knack for entrepreneurship or were you always looking to start your own
Yeah.
business? Or was it one of those things that the opportunity came and then I guess how entrepreneurs always say happen, just things just started happening and you have a business today. But kind of what was your thought process? Was it shocking to you that you ended up starting a business? Or was it something, as a child saying, I always want to have my own company, but then bills gone away or people realize, oh, starting a company is difficult. And then kind of how did you work your way to where you are today?
Yeah. So the first thing is starting a business, being an entrepreneur, especially a VC backed startup,
Mhm.
is the most difficult thing, one of the most difficult things that you can do in business.
Mhm.
And yet, I recommend if anybody is feeling that itch to go ahead and make the jump as expeditiously as possible because it's the best decision that you'll make. I think we need to do away with this mentality of like, if your startup fails, then you failed.
Mhm.
Because the only thing that kept me from being an entrepreneur earlier in my career was, well, one, I didn't have an idea that was like worth pursuing yet,
Yeah.
right? So like I'm not telling people to just jump into any sort of entrepreneurial venture based on a whim, or
Mhm.
something that like you come up with on a Friday night while you're like drinking with your buddies. But if you have a real idea and you pursue it, even if it doesn't work out, the steps that you're going to go through in terms of building the business are going to open doors that would previously not
Mhm.
be open to you. For example, most venture capitalists have what they call entrepreneur in residence programs, where they're actually looking for people that have startup experience at the C-suite level, or at the
Mhm.
VP, or even at the director level, and they're basically giving you a job to help out their portfolio companies, or connecting you with portfolio companies that are looking for certain roles or
Mhm.
certain skill sets that can be helpful to growing and scaling their businesses. And those doors are just generally not open to people that like haven't tried to fight the entrepreneurial fight. So
Mhm.
like I'm very convicted that the best way to start is to start. Like you
Yeah.
just got to kind of dive in and like it's sort of learn to swim in the deep end sort of situation. But
Yeah.
yeah, that was it. And when I was a kid, I always envisioned myself leading a company, but I didn't know what that looked like. I kind of thought it would be like through climbing the corporate ladder, and then I got to corporate America, and I realized that was just not the vibe.
Mhm.
So it's the pirate's life for me, that's for sure.
Yeah. Yeah. No, it's so interesting how, especially when people get into entrepreneurship, they almost don't realize there's a career being an entrepreneur. Like even without having a successful startup, a lot of individuals would go work for another organization as you say, entrepreneur in residence, or even as a lot of times they'll have spin-offs as a side organization or subsidiary that needs a founder who has some experience. So I think when a lot of people look at entrepreneurship, they don't realize that even if your business fails, doesn't mean you'll be a failure, let alone doesn't mean you'll open a lot of times they'll
Yeah.
open doors to having a successful career you may have not even seen before. And I think that's something that is almost like a hidden secret within the entrepreneurial world, how there's actual
Yeah, yeah,
jobs
yeah.
being an entrepreneur. And a lot of people just don't realize that. So
Yeah, that and just I mean, so just to add to that, the percentage of like super successful unicorn, multi-unicorn companies that have been founded by second-time entrepreneurs is like absurdly high. I
mhm,
don't know what the exact percentages associated with it are, but the only real failure in entrepreneurship is not continuing to move forward. And that's the battle every single day. Like the battle when you're running a startup, is like, how do I push the ball forward today? And make incremental progress and be in a better place at the end of the day today than we were at the end of the day yesterday. And if you find yourself in a scenario where whatever the idea doesn't work out, then it's the same thing as it relates to the next opportunity. So, like the only way you can truly fail in entrepreneurship is if you just decide that you're no longer going to be an entrepreneur. And unfortunately, I think that's probably, a more common thing than it should be for a lot of people. And people's circumstances are different and they have financial obligations and whatever. But I truly believe, like, if you're surrounding yourself with the type of people that are as talented, like I've never worked, I was on Wall Street for 10 years and I've never worked with the caliber of people that I'm working with now. I mean, like, you try to work your way into the rooms where, you're not the smartest person in the room. And I don't have any fear of that at this point anymore. You get to a certain point on Wall Street where you're just like, I'm not really learning. I'm not really motivated, blah, blah, blah. And then you get to like entrepreneurship and VC and fintech land. And, you're surrounded by like uber successful, incredibly intelligent people on a day-to-day basis. And like just that in and of itself is a privilege.
Yeah, no, it's always wild. I know even talking to many entrepreneurs who are successful, it's always, like you said, it's the rooms you're in, to them, you might think they're successful, but to them, they're like, well, I have friends who are to their, I guess, 10 times more successful. It's always like a never ending pursuit. But I think the difference, as you touched on, between really, grinding the corporate ladder versus, grinding the entrepreneurship lifestyles, that typically with the entrepreneur, you're creating something you're proud of. There's that creation aspect where you have something to show for your work. Where on the other side of things, it's a lot harder to say, I created something in another organization because it kind of just falls through the cracks, especially, 1,000-person organization. How is your impact measured? And I think at the end of the day, a lot of the benefits of being an entrepreneur is really that fulfillment, feeling that you're creating a difference, but also that constant learning. Because like you said, there is so much to learn, especially when you're trying to navigate business or even develop a new industry, that there's no book to read. You're living the changing industry as you go. So,
well, I think that's why it's important to have a mission-driven company. Like for me, the mission is to enable millions of people around the world to be able to achieve financial freedom and to do so in the most entertaining way possible. Like that's okay. You know what I mean? Like we can educate people in an entertaining fashion and we can be the on-ramp to be able to introduce them to financial markets. And then, through time, risk tolerance and steady investment and learning, like you can achieve financial freedom. It's not magic, it's math. That was my takeaway. From 10 years on Wall Street. Yeah, it's true. It's like, it's just math. 10 years on Wall Street. And my main takeaway from this is that there is a tremendous effort that is given by the banks and by the institution of Wall Street as an overall system to convince people that are not on Wall Street that it's a really difficult thing to do. Like meaning like trading and investing and being involved in financial markets is super complex, and that the lay person wouldn't be able to do this, successfully on their own. And, frankly, that's just complete bullshit. The vast majority of people that are out in the world right now that are smart, intelligent people working jobs across marketing, advertising, like any other sector that's not focused on finance could join a platform like Trading TV, spend a minimal amount of time getting up to speed on a variety of different asset classes, could manage their own money for an extremely small fee or no fee at all, and probably outperform the vast majority of the sort of productized offerings Wall Street puts out on a daily basis. So really what this is about is breaking down this facade associated with you need someone else to manage your money for you, because it's just frankly not the truth.
I think this reminds me a lot of, I've talked to some people who are in the different trade industries, and the classic ones, the mechanic, how like 10, 20 years ago, you go to a mechanic and you'd be like, I don't know what I'm doing. They charge you exorbitant rates. And nowadays with like YouTube, it's like, oh, I can change this myself. It's so much easier. And I even see that with the finance world, where it seems very scary, but I mean, through platforms like yours and others and just general knowledge, you realize, oh, it can be complex, but that 80% of it is pretty simple. Like there's obviously levels to everything, but I see the same thing happening where it's individuals being able to take control of it, but also being able to learn that all these big words and all these, the vocabulary is really
Right.
understandable if you just spend some time reading it and not kind of having that hidden wall or that walled garden approach where you can't get in unless you're in the industry or an insider, which is
Totally.
not true.
And that's the whole thing, right? Is like the big words is Wall Street vernacular, which is again a concerted effort to be able to overcomplicate the simple. And like the most successful investors in the world, like Warren Buffett has like famously said, like if it requires a calculator, it's too complex for me. And maybe that's a slight oversimplification from someone who's worth $75 billion or whatever, but it's not far from the reality. I think the thing about where we're at now is that there's this emergence of a bunch of different asset classes, like the alt space, the DeFi space, blockchain in general, which do require a little bit more kind of just like understanding of newer technologies. And that's where a platform like Trading TV is really differentiated and super valuable, is that as opposed to like reading some dry white paper, because quite frankly, like how many of us are going to curl up with a glass of wine on a Friday night and read some like DeFi blockchain white paper? Like that's probably in all likelihood not going to occur. But what I will do is I'll tune into a creator's podcast, and I'll listen to them talk about it in human terms, in plain English, for 25 or 30 minutes, or like I'll watch an educational video about it. I'll listen to a podcast about it. But like it's all about bringing this thing down to the tangible sort of substantive aspects where you can just tell me in plain English, like why this particular token or why this particular technology provides utility to the world and is like the greatest thing. And if you can do that and I buy into that, then of course, like it's probably a worthwhile investment.
Sure. And so one of the interesting things with any streaming or any services are really the two-sided marketplace. So initially when you started out, how did it start? Did you have a bunch of friends, or did you know a group of people who were these content creators, maybe on other platforms, that felt that they didn't have a great platform to share their knowledge? Because maybe Twitch is very much gaming focused. That's kind of what the platform is built for. Or was it more on the other side? Did you find that a group of individuals wanted to follow individuals that they could understand from, that weren't talking to a bank? They want these individual contributors. And how did that start? Like, really, how did you start developing the marketplace, or both sides of it?
Well, I did 1,000 hours of user interviews before I wrote one line of code. And just to be clear, I don't write code. We have a great engineering team who writes code. But before we started coding, I did 1,000 hours of user interviews, and it was both sides of the coin. So on the creator side, the problem is discovery and monetization. So if you're on a horizontal platform, discovery is really challenging because you're competing against lifestyle influencers, you're competing against beauty bloggers, travel bloggers, so on and so forth. Recently, you've seen a change in the way that the algorithm scores content to actually diminish or in some way shadow ban crypto content and other forms of financial content. So it's becoming more and more difficult for these creators to build an audience on the big horizontal platforms. So I knew that there was going to be an opportunity there to break out finance as its own individual verticalized community and platform. And to be candid with you, finance has been deserving of a platform like Trading TV for a really long time, moving from being opening act to the headliner of the tour. So it was just sort of long overdue. And then the second is the monetization aspect. So our business model is not correlated to advertising revenues, which is where all the other social media platforms are making. So we have a subscription-based model similar to what Twitch does for gamers, but for creators, for financial content creators. And then most importantly, because we are a fintech platform, we're generating a lot of money from e-commerce, brokerage activities, wealth management, so on and so forth. and we're taking a percentage of total platform revenue, and we're giving that back to creators in the form of bonuses based on engagement on a monthly basis. So because we're generating so much on the back end from the fintech side, we have the ability to be able to pay creators multiples more than what they would make if it were only an advertising based payout system. So I think the creators on the top of the TTV earnings list will be some of the highest paid creators in the entire industry on any platform, covering any subject. And then on the other side of it, it was really just about thinking through, the sort of everyday user, just person that's not a content creator's journey, and trying to really untangle that massive just web of chaos that they were navigating. So they were going through Twitter, TikTok, Instagram, YouTube, whatever, very difficult to be able to sort of find financial content. You didn't know who to listen to, who not to. Once you found that content, you had to close that app. You had to open up another app, go through this really long, arduous process of being able to place a trade. There was also different apps for different asset classes. So, you had one app for crypto, one app for stocks, one app for NFTs, one app for sneakers, one app for trading cards. And it's why? You could just, it's all the same thing. And you can just consolidate that entire user experience, that you get your content and your transaction capability across every different asset class that you could ever imagine all in one place. And then as an added bonus, all that data starts to speak to each other so that you can build cool and innovative fintech product on top of it. So for example, if I collect NFTs and my NFT portfolio organically goes from say $10,000 to $250,000, I shouldn't have to sell my NFTs if I want to buy a house. The place that I have my NFT collection should recognize that this portfolio or whatever is now worth 250K, and there's some liquidity associated with that. And so we should be able to give you a mortgage with your NFTs as collateral, for example.
Oh, interesting. It's how you describe it as you kind of crack the code. So I mean, growing up very much within in the tech world, the biggest issue was how the heck do you monetize? How do you monetize, all these big social media things? There was always advertising, which sounded great until everyone has the same go-to-market strategies. People will come here and they'll advertise. And as with all these businesses, it's very challenging to even turn a profit. But it sounds like you've kind of figured it out in the sense of having a fintech organization and then using this as, just as valuable, but kind of bridging the gap, having a way to monetize that isn't just advertising, just isn't hoping you just get eyes on the platform, but kind of having a method to do that. It's very interesting and refreshing to hear. It's always annoying when you talk to someone, they're like, well, interesting business idea. How do you monetize? And they say advertising, that's,
it's terrible.
It's not really a thing, but yeah.
I had the benefit of, I was a professional trader and investor for over a decade. And so as a job, I would look at both public and private business models of companies, again, in social media and fintech. And there's sort of two different issues that were unique to each vertical. On the social media side was the issue that you just alluded to, which is advertising is a decent business model, but it's a terrible business model unless you have massive scale. So if you think about whatever, Snapchat, Twitter, Instagram, all of these companies were losing a tremendous amount of money with 50 and 100 million users on the platform. Conceptually think about that, right? You have 100 million people that are using your product and you're losing money. And I know people are saying, people that listen to this are saying, oh, well, they're putting a bunch of their money back into the business and they're investing for growth and they're running, free cash flow negative on intentionally and blah, blah, blah. Yeah. Okay. If those companies, when they had 50 million users, tried to focus on profitability, they wouldn't have been able to. On the other side, it's the fintech side, which has a different problem. Once you get the users, they're depending on the fintech business, but most fintech businesses are extremely profitable on a per user basis. But the ability to be able to get those users from a customer acquisition standpoint is extremely difficult and costly. So, most of the legacy brokers, for example, are paying over $300 to acquire users. And so, you think about that cost structure for a startup, it would be existential. You would go out of business. The model that we've employed is saying, okay, let's take this creator first
Mhm.
approach. Why? Because people deserve to be able to
Mhm.
monetize their passions, and like it's a good form
Mhm.
of educating people on the on ramp. But then from a business perspective, you're also utilizing the creator's audience
Mhm.
reach to be able to bring that audience onto the platform. That lowers your customer acquisition
Mhm.
cost and creates this really nice pipeline to be able to push fintech product through. So
Mhm.
that's the game plan. See how it works.
Yeah, no, it's super interesting because like you were saying, the CAC or cost of acquisition on social media is dirt cheap, hopefully dirt cheap. You have to get 100 million, but on the
Right.
financial side or any, I guess, heavily monetized, well, financial or any, I guess, other service-based industries, it's your cost of acquisition is so high. So that's always the barrier of entry, especially with a lot of these, I guess in the financial world, it's the same, but in all of these other industries, the reason there's not a lot of competitors is because if it costs $1,000 per user, what startup can
Yeah.
afford to get into the business without having a huge cash flow behind them. So it's kind of interesting how you really took the strengths and weaknesses of both worlds and really combined them to create what you have today. When when starting out, did you always focus on having many different asset classes, or was there initially a focus on one type, whether it be stock, crypto, NFT? Was there initial focus, and then you branched? Or how were you able to choose? Because I feel, especially within this world now, me not really being into it, I feel like every week there's something else that's being traded. Pokemon cards were huge. Now this was huge. How were you able to kind of focus on what to kind of keep the brand of the platform consistent?
Yeah. Okay. So it was something that I thought about initially, and that was the reason why we called it trading TV
Mhm.
as opposed to like, whatever stocktrading.com or
Mhm.
whatever, because we didn't want to pigeonhole ourselves to one particular asset class. But the thing that we started to see very early on in development was the emergence of these new asset
Mhm.
classes and how passionate the user base was
Mhm.
associated with that. Now, on the back end, you can't like develop as fast as the market is
Mhm.
expanding. Meaning, like when we first started coding the product, NFTs like weren't a thing. Now they're the biggest thing in the world, right?
Mhm.
And you kind of want to think about your product development pipeline as a longer term thing. So you don't
Mhm.
want to be too reactive to whatever the flavor of the week is. You want to
Mhm.
have like a longer term thought out strategy. I happen to believe, like obviously stocks are always going to exist.
Mhm.
I have and would continue to bet my career on the proliferation of crypto holistically. Other blockchain based technologies that are turned into investable assets, of which NFTs are obviously very popular. So those are the things that we knew we wanted to be in the business of. The tougher ones are, sort of like legacy financial assets that are out of vogue right now, but have over time been, good product lines to focus on, like FX, for
Mhm.
example. So we don't have like FX trading capabilities, but there's a lot of people that are creating FX oriented content on the platform. So really it's just a function of, it's a function of like, get the content up there. And, because it's a live stream platform, because it's a video platform, because it's a chat platform, there's no, let's say, barrier of entry
Mhm.
associated with what types of content you can create, as it relates to the asset class. And then let the data associated with user engagement. So are people looking at, crypto videos? Are they
Mhm.
looking at trading card videos? Are they looking at, sneaker live streams? Like how active are these communities? Is the
Mhm.
membership growing? Is it shrinking? And then that drives the decision making on the back end associated with what you build transaction capabilities for.
Mhm. Interesting. That makes a lot of sense because I think one of the challenges with any startup or any entrepreneur, or even within the fintech world, is that the ability to always want to have whatever new and the hottest that week instantly. And a lot of times, like you were saying, it's you need to use the data just because how trends change. Your business can never adapt as quick as people's interests adapt or trends adapt. So I think it's interesting about how you were saying it is through the platform you can see what is common. Is it something that I guess on other social media, other media platforms more popular? Is it just a very vocal minority, or is there a bunch of users who are actually interested in this that can really grow the platform, that can continue interest into it? And I like your approach is interesting, especially just using the data on your own platform that you're generating to say, okay, is this something that's continuing to grow? Should we put more product hours into developing an easy way to display this or easier way to share these asset
Yeah.
classes? I think is makes a very good approach to something that could be seen as very hectic or dynamic all the time with interest changing, or like you said, NFTs a year ago weren't really a thing, and now they're the coolest, hottest things in the industry, changing every week. So kind of unique on that
Well, this
front.
approach, by the way, yeah, the approach, we're the home of uninstitutional investing because we service the retail trader and the financial content creator. That's not a licensed investment professional. So this isn't, the talking heads on CNBC or whatever, God no. But from an institutional perspective, in terms of how the investment banks set up their businesses, they're broken up into, like, let's call it 3 to 5 trading floors of various sort of asset classes, those asset classes being fixed income, currency, commodities, and equities. And anything that falls broadly within those asset classes you can trade. So, there's a desk for you to trade basic US stocks. There's a desk for you to trade, structured derivative products. There's a desk for you to trade agency-backed mortgages. And it's kind of like, this is sort of the casino, and like you walk into the casino and there's blackjack and there's craps and there's slots and whatever else. And I think, like, that's the sort of digital place that you want to create from like an investing standpoint or a trading standpoint. It's like, you should support as many asset classes are as viable as supporting, so long as, it's done in like a responsible manner and you're providing value to the user. And the thing that is most important for me is that all of these various asset classes, as you accumulate them and they become a part of your portfolio, are communicating with each other. That's the real sort of hidden sauce, is they need to be able to communicate with each other, because there's a lot of like great analytical insights that you can get from having those things connected. And like entire businesses have been built just on creating a dashboard that connects you to those various outlets. Like if you think about like mint.com or whatever, like all it did was connect your bank account and your credit card account and like, a couple other places, and like it would just give you a dashboard, and that was worth apparently like a few $100 million. So like at a base level, those things just need to communicate with each other as a form of being able to enhance overall visibility into what you're actually long and short.
And it's so interesting how you're saying like connecting things is so important. I think a lot at times when it comes to even entrepreneurship in general or creating a business, a lot of people don't realize like connecting two different worlds can be a business at the end of the day for a lot of things, or even dashboarding. I think that was always surprising how like a lot of people, it's like, oh, what do you do? Like, we just get your data in front of you. And you're like, oh, how's that important? You have a sales force that's literally just collecting data. They're not generating data, it's sales data going in there, or all these other businesses. And I think that's always funny how you brought it up. While you create, while the business is starting and growing, was there anything, being an entrepreneur or starting a business, that was either easier than you thought or a lot harder than you thought initially going into it?
Yeah, I mean, product development is much harder than you think. Like, I think, so there's a couple of things here. One, the market for like super talented engineers is the most competitive that it's ever been in the history of tech. That's not like a jaded fintech founder that's, in the middle of fighting the wars that's saying that. Like, I genuinely believe that because there's so many, like, it's a good thing. Venture capital dollars are raining down on startups, and good ideas are getting funded, and all that's positive. But it also means that it's extremely competitive. And then also the enterprise companies. So even outside of the Facebook, Apples, Amazons, Googles of the world, most enterprise-oriented tech companies have become sort of fed up with startups poaching their talent, and so they're making a concerted effort to be able to retain people. And so it's really difficult to find engineers that can build the products that you have basically ideated on, and the way that you think of it working in your mind. So I think that's probably the toughest part. The easiest part of it is, I would say raising money probably is it's like an easier thing than it probably should be right now. Like most people, there's just a lot of venture cap. There's more dollars being allocated towards venture capital than there are good ideas for those venture capital dollars to go to. And so, like I would encourage people to raise money and to be out in front of VCs even before you think it's probably time, because the worst thing that can happen is like, say, hey, like, whatever, your idea sucks. No, go away. Okay, great. So as long as like you get a little bit more granularity on why the idea sucks, then like you can iterate and you can go back into the office, and like you're probably going to continue to get meetings because they're looking for ideas. So yeah, I would say that the toughest part is just talent and hiring, specifically on the engineering side, and the easiest part is raising money.
Yeah, it's always growing up, or even going, you always hear it's like human capital, or humans are like the key lifeblood to your business, and they're so hard. But then you always think, oh, there's so many people out there. But top talent, especially kind of working through a tech world, is hyper competitive, and so much more competitive than I thought. Having few of my friends who are in that software engineering world, how it's like every week they're like, another job offer, just because there's almost in the inversely, there's so much development required and so few people who can really manage and run the ship. And I think it's always shocking how it's so difficult to hire good talent, or I guess it's such a competitive market, like you're saying. And I've seen it same as you. It's not getting easier. It's just getting harder as more and more VC dollars are out there. And as more and more of these businesses are realizing it's harder to stay ahead of the curve. So you constantly need more and more talent to push you near the edge. So
yeah, I mean, I can tell you for sure that like the bigger companies that are out there that can afford it. So, the FANGs of the world or whatever, they acquire talent out of college or sometimes, out of other companies without like really a place to deploy that talent to. So the idea is like, hey, if you graduate from Stanford computer science and you're an absolute rock star, we might not have a specific team or role for you, but we're happy to pay you a salary and get you, onboarded to Amazon, for example, because if you work at Amazon, then where you don't work, Google, or Apple or whatever. So, like it's that hyper competitive right now. And I agree, like, people always say, oh, well, like, how can that be? I know so many people are like looking for jobs and so on. Like, it's the middle tier is always, there's always people, candidly, like if you're average, like it's always going to be sort of tough to find a good job. But it's hard to get the top tier people. That's what's difficult, is the real rock stars, because those people are never unemployed. They always are quite well compensated and are quite comfortable in their current gig, and you're trying to convince them to shake up their entire life and to join the entrepreneurial journey with you.
It's so fun. I think it's always growing up. You always saw like, there's professional athletes and they're head and tail, heads above everyone else. They're so much better. Until you realize there's the same concept in the corporate world. There are lawyers that are, heads above. There are programmers who are heads above. There are salespeople who are heads above, and they're making crazy money. But I think it's just because they might not look like athlete. You can see, wow, they look different. But a lot of these people, they might look the same as you, and you're like,
so,
oh, it's
so true.
They're just so good at what they do. And I think it's funny, once you get into the corporate world, you realize that it's like, oh, why is this person paid, 7 figures? It's, because they're a NBA caliber.
Because they're LeBron.
Yeah, they're literally they're LeBron.
Because they're LeBron.
And it's so, and I never.
That's
never
the thing.
really
I say that all the time. Yeah, I say that all the time. It's like, to your point, visually, like optically, when you see, a 6'8" human being, and you're like, oh, okay, they're ripped up and they look like, the Terminator or whatever. And you're like, okay, that makes sense. Like this person plays football or they play basketball or whatever. And it's just easy to conceptualize that. And because there's no physical limitation associated with what you can do in the corporate world, you can be any size, weight, whatever, it doesn't matter. It's just all, a mental EQ and IQ thing. It is tougher to be able to identify that, and it's tougher to wrap your mind around that as well. It's just, but it's true. Like there are, the same way, to your point, that there are, the LeBron Jameses and the, whoever the Pat Mahomes of the sports world, they exist in the corporate world as well.
Mhm.
Just, there's less sort of identifiable
Mhm.
metrics. There's no combine. There's no
Yeah.
combine camp for
Mhm.
for corporate America, unfortunately.
And that's also why hiring is so hard, because there's no combine. It's really hard to compare people based on different skills. And like you said, it's kind of like drafting in regards to a lot of these big tech companies. You'll grab someone because you know they're going to be a superstar one day, or you're betting they will be. But if you keep them at your company, if they do pan out, you have your next CMO, CFO, CEO possibly, and you're taking them away from other teams or other organizations. So it's really funny how this sports metaphor really plays out in every sense of the way, from hiring to drafting to everything else. So, very interesting conversation, kind of how you created Trading TV, really the mentality behind it, and how the monetize, and really what you're trying to do. If you want to follow your story, what's the best way to follow along, kind of get in touch, or at least see what you're trying to build at over the next few weeks, months, and years?
Yeah, absolutely. So the best way is go to www.trading.tv. Right now, the app is invite only, but we're starting to let more and more people
Mhm.
onto it. We're letting another wave of users on at the end of this month.
Mhm.
So if you're on the wait list, I think there's a good opportunity that you'll be given an invite. If not, everyone that we let on is being given a few invites, so you can get them that way as
Mhm.
well. And then my own personal socials, at Tobias Francis on Twitter and Instagram, and then Trading TV's Instagram is at ttv.hq. So we put out all that. LinkedIn is also a good place to check for company updates. We have a Medium blog. So we're out there, man. I mean, there's no shortage of content. We like to think of ourselves, first and foremost as a creator and content company. So we try to produce as much of our own stuff as possible and get it out into the world, and make sure we're engaging in a dialogue with the community on an ongoing basis. So yeah, check us out.